Josh, the CEO of Ritholtz Wealth Management, of course, a member of the Halftime Investment Committee. Welcome back. What's really riding on this? It seems to be a big one, like a referendum on the current state of big cap tech.
I think it's an important name. By market cap, it doesn't come anywhere near the FANG stocks, although it did get close at its high. But still, $400 or $500 billion market cap companies matter mathematically to the NASDAQ. But I think you had it right. From a sentiment perspective, this is a company that has beaten earnings in each of the last 4 quarters. They play this game with Wall Street's analysts very well. They're in 6 or 7 very important segments of the market. Obviously, data center filters through to a lot of publicly traded companies. Their comments are as important as Google's, as Amazon's, as it pertains to cloud, et cetera. So, yeah, this is a big one, and it's a big one for me personally because it's one of my favorite long-term investments that I'm involved with today.
That's why I asked you about it, and we're so fortunate to have you today. Are you concerned, given what we've gotten from some of these other mega caps? I mean, if I read you this thing, 8 stocks, Josh, Amazon, Apple, Microsoft, Meta, Nvidia, Tesla, Netflix, and Alphabet are responsible for nearly 60% of the year-to-date loss in the NASDAQ 100, and that was as of yesterday's close, right? The losses have been big over the last month and year-to-date now. So how concerned are you given all of that leading into this?
Well, the universe finds a way to eventually balance itself because that stat, you could have flipped it on its head a couple of years ago and pointed out how much of the upside was being driven by just these 6 or 7 names. So obviously that was unsustainable. Had that continued, these companies would now be 80% of the market if the pace of 2018, 19, 2020 continued. So of course, that was never going to happen. That being said, Nvidia is off 44% year to date, like on the year. So I think everyone understands the smartphone market is slowing. I think everyone understands the PC market is not going to be gangbusters. And yes, the big question mark is about gaming, but almost half of this company's business is the data center. And by all accounts, based on everything we've heard from other companies that play in that sandbox, those numbers at least should hold up and should exceed. Is that enough for the overall stock? We'll see. But when you have a stock that's already lost half its market cap, given the environment, and by the way, that's in line with every other technology stock, I would point out, you have to ask yourself, to what extent are people really betting on some sort of a massive upgrade in guidance? I don't think they're going to get it. Nvidia already told us over the weekend they're going to slow the pace of hiring. That, to me, sounds like a little bit of a sandbagging, but we'll see what happens. So I'm going to be a shareholder tomorrow, regardless of what they say tonight. But I do agree with you. The stakes are pretty high for a lot of different sub-industry groups of the market right now.
Trying to think about how high the stakes are for the NASDAQ in general, Josh, right? I mean, it's down 30%. It's been unstable. Some say it's going down a good amount more than it's already gone down. This can either stem the tide or give reason for the sellers to start selling again.
It's true. If they shock us to the downside, this will be snap times 2 or times 3. So what you said is true, but it's a very big if. I would point out, in the time that I've been long this stock, starting from the summer of 2015, so we're really talking about like 7 or 8 years now, this is a name that you have had to sit through 30 and 40% drawdowns on a regular basis, like every 18 months on average. You've had to suffer through a massive bear market in shares of Nvidia. Sometimes that's taken place in otherwise good markets, and sometimes the stock has just come down with the NASDAQ or with the Dow. So you've had to sit through both company-specific drawdowns when people have gotten too optimistic or the company's disappointed, and you've had beta, you've had market risk. So right now, arguably, you have the risk of both. You could have a risk-off day for the market. We have roughly 2 or 3 a week these days, where it might not matter what they have to say. And in fact, we're seeing the worst reaction to positive earnings surprises in the S&P 500 than we've seen any time since 2011. You got companies beating by 5, 6, 7 cents per share on earnings and selling off 4% the next day. It is not a great environment to make earnings bets. So I would not tell anyone going into this, you got to get yourself long in the after hours. That is not what's working today for anybody in any sector.